What's going on, guys? Welcome back to the channel. It's becoming even more critical nowadays to track whales and what whales are doing, and we're starting to do that in a manner that allows us to be able to actually see even what AI is doing in terms of the market, being long, being short. This is critical stuff, guys. You got Grok versus Claude versus DeepSeek versus GPT-5. All of these are really competing, and this is what's going to happen in crypto in the future. In the future, it will be a bunch of nerdy computers that trade against each other. But let's have a look at the market. In this video, I really wanted to talk about, look, 65% of the market is long, 34% short, and the sentiment right now, altcoin season is at 37, but the market is still very fearful. Fear and greed index here is sitting at a meager 26. So let's not celebrate anything. We know the bubbles are a mix. The market is absolutely kind of has been cooked. It's facts. We're not going to sugarcoat anything. But your conviction is your money. Your conviction is your wealth. What you believe here from this point onwards will pretty much make a huge difference in how you invest. You've got computers entering the scene. You've got market at an all-time fear. You've got long versus shorts in the market, genuinely across favoring longs at this moment in time. But one thing that I did say, and this information is free for you guys. I did say to you yesterday, this is an interesting trend, and I haven't seen anyone talk about this, right? Yesterday, I kind of gave you what we've been doing this cycle, and it looks pretty obvious to me what's going on here. Very, very obvious. So look, while we had that candle, could we be at the start of a new uptrend? I'm not going to get too bullish. I'm not going to get too bearish. I want to control my risk management into 7 or 8 points that we can genuinely use when it comes to exiting the market and looking at bear market triggers. And I did share this with the group last night, but I wanted to do a video on this because it's very important sometimes to look at the wider consequences. So if any of these things happen, there will be a catastrophic or combination of these things. If they happen, there will be a prolonged or even a really bad crypto bubble, a bear market, as and when it comes. Are we there yet? Absolutely not. At the moment, we are far away from that. And until we hit that, until we hit those levels, we are not in a bear market just yet. Now, BTC long-term capital structure is something to look at. So let's break this down further, guys. I'm going to try and use a straightforward, common sense manner with which you guys are able to understand and follow. So number one trigger, it's an obvious one, is what we had in 2021. And this is called the double top DT, and not from Arsenal Fan TV, but DT double top pattern on BTC, right? So have we gone like what we did last time? We went, everybody thought it was over. We went again, and then this time it was really over. So this will be something to watch for me, right? We need to watch this. Now, in order to watch that, has this happened now on the chart? If we look at the chart, you could argue, I mean, a lot of people have argued that this current run, 24 to 26K, did look like a double top. I personally do not think so. Why? So when we open up the chart and we look at the pattern, in terms of is it the concern for me right now, in terms of my overall thesis in what's happening in the market? I don't think so, right? And this again, USDT dominance, but this one is not really a concern for me. So double top at the moment is, for me, fear-wise, I would probably say this is going to be kind of like mid to short term, mid to long term kind of fear for me. Okay, so we'll go to number 2. Number 2 is very simple. The stock market looks like this. It has one of the best V-shaped recoveries you'll ever see. And if you don't believe me, if we go here and look at the stock market, right, you will understand exactly what I mean. So fear number 2 is the stock market. Now, why am I placing any particular emphasis here? It's because of this, guys. Stock market is incredibly, and this is April. I'm looking at the weekly chart. And when you drop this into the daily chart, you'll start to understand why this is the king of all kings here, running super hot. And these are the April lows, right? So you have the April lows here, but this is the recovery that the stock market has done since April. So this would be a stock crash, would be my number 2, would be the stock market. Okay, stock market crash. And in terms of the fear level, this is mid to long term. Why? The stock market is going to be propped up. It's completely different in terms of how things are running. Since the April lows, the stock market has rallied to greater heights. Now, I would say the stock market is linked to the next one, which is going to be a major, major concern. But in terms of the overall stock market RSI, I think stock market is not a concern. Earnings season is just happening in the last 2 quarters. So this one for me is a mid to long term concern. And therefore, right now, the way I see it, is tied to number 3, which is the AI bubble. Now, if you're not scared of this, because they're telling us exactly what they're going to do, the AI bubble is an interesting one. This is to do with AI companies, okay, who've taken on huge debt, massive, multiple billions of dollars in investment with 0 returns, right? So think of a classic house of cards or Ponzi or whatever you want to call it. The AI bubble is likely to be not just a Ponzi, but I think when it crashes, this will be 17x, according to analysts, bigger, right, than the .com bubble. So we need to be aware of this. I think this is going to be huge. Now, in terms of this, I would say fear equals to mid to long term. However, that could always be downgraded into late 26. Perhaps this would be a catastrophic trigger of a super bear market by 27, 28. It could even be linked with the movement of Trump, the Democrats coming in, and of course, that is also a threat for crypto anyway because of deregulation. But the AI bubble, make no mistake, should be on your radar as a bear market, catastrophic / stock market crash. Okay, so that's another one. Okay, DXB, what's next? Fear number 4, right? Now, again, you got to, fear has to be always rational, right? Fear number 4 is my biggest concern, and this is regarding something called liquidity. Now, retail doesn't get this. Retail does not give a damn about liquidity, but let me be very clear with you. Yes, we may be entering into an environment of quantitative easing. He's confirmed as much as that, and I'm talking about Mr. Powell. So JP has confirmed pretty much quantitative easing. Ooh, so the money printers are going on. But currently, a hawkish Fed, and of course, the current situation where liquidity is low is not a good environment, right? Without liquidity injection, so we need liquidity to be injected into the system. Without liquidity injection, the system, basically think about this as being the lubricant to keep the railways going. There is absolutely no way risk assets go up. No way. Liquidity is the driver of everything. Now, Trump is saying, I've done everything for you. Now it's over to the Fed, but the Fed have been very slow. Liquidity crunch in the system. So let me explain something to you. Banks, right? Plus, institutional lenders, let's say, for example, institutional lenders, plus the whole entire system. So the whole entire credit system is basically low on cash. What that means is you're seeing an indirect reaction of gold, and that's what's been happening so far. So precious metals have been skyrocketing because the environment is uncertain, and there is a lack of liquidity, double L. What that means for me is very clear. When they talk about QE, when they talk about rate cuts, these things don't show up immediately. So we may be entering into an environment where this year is almost kind of different. So my expectation, just to be very clear, I still want to be out of the markets by the 31st or sometime this year. I would like to do that. That is my traditional 4-year cycle. And on a personal level, it's been a long grind. I've been holding a lot of coins. I need to cannibalize a lot of this before the 31st or up to the 31st. But the market may dictate that this current situation we're in terms of the chart, we remain like this for a little bit, and then we kind of like go crazy, right? So the traditional sense is we still see November and December go nuts. These tariffs go away. Trump announces the China deal. So the deal comes through. And this is important because that deal is coming plus CPI, right? Plus, if you look at the CPI plus the Fed meeting, all of a sudden you have a trifecta of things that could send the markets. So in order, the first one of these is the CPI on Friday. I think we've all seen the expectation. We should have 3.1 to 3% in terms of the inflation data. Then we've got the Fed meeting. So after CPI, we've got the Fed meeting. And then number 3 to send the markets is Trump plus Xi meet up, Xi Jinping on the 30th, right? 30th of October, and the markets just go absolutely nuclear. I do believe this is what's going to happen. That's my original thesis. But if there is no liquidity, or if there's no change, or the alternative fear, which is an immediate fear, by the way, not mid to long term like the others, like the stock market, AI bubble, liquidity is equal to immediate fear, right? This is the mother of all fear for me, because I think if liquidity doesn't get injected into the system, we could be writing off 2025 and having that quantitative tightening or QE and QE begin in 26. So rather than looking at maybe the bull market top this year, the cycle changes and we are at the start of some kind of a bear market where we go into 2026. Then obviously QE comes in, and by me, like they're printing right now anyway, and then we top next year in 2026. That could be. But so far, it is liquidity is my immediate concern, where if I don't see any changes in the liquidity game, I want to be out, right? I want to be out, and I want to, before the market get worse, I want to study the market again. And of course, in this case, we are going to be in a full bear market, which means it will last maybe 6 months, maybe 8 months. Nobody wants to hear that. But liquidity right now has got to be improved. All right. So, plan to, if you fail to plan, you plan to fail. Now, number 6 is the government shutdown. And this fear is pretty much a nothing burger. Okay. The government shutdown, first of all, we are through the majority of the period, should be coming to an end very soon. And it's not a trigger for me to be able to call a bull market top, because this happens all the time. It's a nothing burger, in my opinion. Number 7, earnings season. So September or Q3, October. So we are in the earnings seasons, guys. And one of the reasons why we've seen what we've seen is because of companies taking profit taking in the stock market, earnings. Overall, they have not been bad at all. And why am I looking at earnings in particular? Earnings are very important because they are an indicator of the economy, right? If the economy is good, there are positive earnings. If the economy is bad, negative earnings. So far, earnings have been very, very decent in the stock market, and you would expect that anyway since April lows. So in my opinion, this, in terms of the fear, this equals to low / no fear, right? So fear in terms of that, but it is absolutely something to look at when companies starts falling, earnings starts diminishing. It's always a cause for concern. Now, this one's going to be interesting. 7 or 8. Let's call this Bitcoin. So BTC treasury companies. Okay. We're going to call these. So the first one we're going to look at is strategy. Can strategy be too big to fail? Because you're looking for bear market triggers, guys. You're not looking for just market dips. And absolutely, when you look at the pyramid, this year, in the next 2 years, they are going to invest about $42 billion into Bitcoin. They borrow, collateralize. And the model is somewhat working at the moment, but MicroStrategy, or strategy as they know, is definitely not too big to fail. And when this comes crashing down, I think we will be in one of the deepest bear markets in crypto. In terms of the fear scale, this is more of a long-term, because by the time MicroStrategy, if the price of Bitcoin all of a sudden, even now, if it dips to levels below $60,000, they get liquidated, right? 60K or below. So that is another major fear and another sign where I don't really see this should be everybody's radar. This should be, if you see any faltering news at some point with MicroStrategy, get the F out. I'm not saying on long-term stuff, but that would be absolutely cataclysmic. But I'd say this is more of a medium to long-term crypto, fear for me. Okay, number 7, number 8. Let's go number 9, right? Number 9 would be Bitcoin dominance, right? Changes. BTC dominance changes to what we've known, and instead of crashing down, it continues to go into next year. Are we seeing any signs of that happening? And the answer for me at the moment is no. Bitcoin dominance has been incredibly scary. What we've seen here is Bitcoin dominance come in back into range here. Look at that wick, all the way up to 63 point, almost 63.5. So if we all of a sudden, and again, we're looking at the daily, let's have a look at the weekly. It's pretty much, it looks like it's going to top out again. It looks like it could potentially form head and shoulders around here. But if something was to happen that is cataclysmic, where Bitcoin dominance comes back into range and starts trending again within the ascending channel, that for me would be a massive cause for concern. So dominance equals to an immediate fear with a low priority based on the trend, right? The trend. Because if it comes back into trend, which is like a 4 or 5 year old trend, right? So this is what's happened so far with Bitcoin dominance. We've been doing this, and then we fell through, we tested, and then we fell, and now we're coming back up again. If this gets back in here and gets above 64%, 65%, and then all of a sudden builds a new, a new kind of range within the range, or actually just starts breaking the range and builds a new uptrend, I think then we need to be able to say, quit this cycle and go for a nice cold bath. But that's not going to happen. I'm hoping that what it's doing here is very clear. It's very bullish. It's going to come and test this average moving average here, which is the 50-day moving average, which flips green and blue according to the period of bullishness or bearishness that Bitcoin is in, or Bitcoin dominance rather. Then we get rejected here, like we've been getting rejected even all the way above from there. All right. So in terms of priority for now, Bitcoin dominance is low, right? Short term. Okay. And it could be, it could be immediate as well, because immediately right now it is still going up. So we need to watch it, right? We need to watch this with a nice pair of glasses. However, it is not time to be afraid of Bitcoin dominance. Bitcoin dominance is one of the key criterias along with USDT dominance, but that time is not now. So let's summarize this, guys. So if I see multiple of these conditions, right? I know we talked about a lot of things here. The takeaway here that you should have from this video is right now, it is basically liquidity. That is the most important in terms of taking us into a bear market. Okay? Make no mistake about it. If liquidity doesn't come in, yes, the Fed has cut rates. So back in July, August, when everybody was bullish, I said, guys, it's a trap. They're going to F us. But what I didn't expect is the Trump tariffs to resurface and the market to be absolutely killed and nuked. So here's what, out of these 10 points that I've given you as bear market triggers, if you take one thing away today, take the word liquidity, right? Liquidity. Take that word and understand it, because from QE, so from QT to transition into the QE phase of the market, what needs to happen is the Fed not only has to pivot, okay, and we're not talking about rate cuts alone, right? The policy has to be to buy back, and the Fed's balance sheet to do what we call liquidity expansion. When you see that happen, then automatically you will see risk assets absolutely skyrocket. And what's happening right now, risk assets are down, but gold has been doing this. Now I'm going to tell you something quite interesting. So the gold trade, right, is the best rotation you'll ever see. So if we go from gold, right? So let's do gold. You're about to see whatever happened in gold is the most bullish thing for Bitcoin. I guess what we're arguing about is because we hold a lot of shit coins, right? We are killed absolutely and tested by the markets. So we don't actually get to live to enjoy the fruits of our shit coins. So that's why we need to have, number one, at least one asset, right, with an ETF. If you don't have that, look at your portfolio. If you don't have one asset with an ETF, you are absolutely mental. If 50% of your portfolio, 50% of that thing you're holding is memes, right? You are effed. If all you're doing is buying low cap gems, right? You are absolutely cooked. And I'm not going to sugarcoat this to you because yes, people talk about meme coins. Yes, we will talk about gaming. We will talk about all of those amazing things that will do 100x for us. But first of all, you have the likes of say, you have Kaspa, you have Tau, you have Ondo, you have Zibek, okay? You have all of these, CBCN, you have all of these amazing, you have Beam, you have Arweave, all of these will get the money quick behind BTC, ETH, Sol, right? The likes of Sui, all of these will do very, very well because they are institutionally understood. Some of them have a degree of ETFs. Some of them have multiple ETFs. But what you need is a basket of cryptos. If you don't hold Ethereum and Bitcoin and Solana and all of those large caps, to be fair, the next time you're in this market, go for these generational assets because assets like decentralized AI in Tau or an Ondo, which is going to be Wall Street's main entry point into crypto or any of these quality assets that are not sitting at $5 million or $1 million market cap, you'll make money from them long term. So just to summarize, I hope you like this video, guys. I'm going to tell you your conviction, right, is equals to your wealth. You take any man or woman out there today and you ask them what they hold and whether they held, say, Solana at $8 on the night of FTX, right? You will get hundreds, if not millions of people saying, yes, we did. I hold Solana at $8, but they sold it. Conviction is the only way to make money in crypto. That is the only key that you need to take away from this video. Be convinced. Hold your projects that you're convinced about, regardless of the market, and money and wealth will find you. Leave a comment. Hope you like this format of video. Take care, guys. God bless, and I'll catch you on the next one.